Hello everyone, and thank you so much for tuning into our channel. Today, we will be covering a topic that is absolutely essential for your financial well-being, and that is credit. Whether you're just a student who doesn't even have a credit card yet, or you are a financially savvy consumer, understanding credit, what it means, what it does, and how it impacts you can help you build your future for the better. In this video, we will be going over your credit report, your credit score, who creates your credit report and score, who can see and use your credit report, what is included in your credit report, and why your credit report matters. So without further ado, let's get into it. Your credit report. This is a summary of your credit history. It is first created when you borrow money or apply for credit for the first time. Lenders will send information about your accounts to the credit bureaus, also known as credit reporting agencies. Having a longer history of credit helps build your credit score. Speaking of your credit score, your credit score is a 3-digit number that comes from the information in your credit report. It shows how well you manage your money and how risky it will be for a lender to lend you money. Using credit responsibly will help you build your score, and vice versa. But it is impossible to know how much your credit score will be affected or will change based on the actions you take, because credit lenders do not share the actual formulas they use for credit scores. These are some of the factors that affect your credit score. They include how long you've had credit, how long each credit has been in your report, if you carry balance on your credit cards, if you regularly miss payments, the amount of outstanding debts, being close to, at, or above your credit limit, the number of recent credit applications, the type of credit you're using, if your debts have been sent to a collection agency, any record of insolvency or bankruptcy. Lenders set their own guidelines on the minimum credit score you need for them to lend you money. If you have a good credit score, you may be able to negotiate lower interest rates. However, when you order a credit score, it may be different from the score produced for a lender. This is because a lender may give more weight to certain information when calculating your credit score. Who creates your credit report and credit score? In Canada, there are two main credit bureaus, TransUnion and Equifax. These are private companies that collect, store, and share information about how you use credit. Equifax and TransUnion only collect information from creditors about your financial experiences in Canada. Who can see and use your credit report? Credit bureaus follow rules that define who can see your credit report and how they can use it. Those allowed to see your credit report include banks, credit unions, and other financial institutions, credit card companies, car leasing companies, retailers, mobile phone companies, insurance companies, governments, employers, and landlords. These businesses or individuals use your credit report to help them make decisions about you. These decisions could be whether to lend you money, collect debt, consider you for rental housing, consider you for a job, provide you with insurance, offer you a promotion, or offer you a credit increase. A lender or another organization may ask to check your credit or to pull your report. When they do so, they are asking for access to your credit report at the credit bureau. The results in an inquiry in your credit report. Lenders may be concerned if there are too many credit checks or inquiries in your credit report. It could seem like you're urgently seeking credit or trying to live beyond your means. What's included in your credit report? Your credit report contains personal, financial, and credit history information. In general, it takes 30 to 90 days for information to be updated in your credit report. Personal information in your credit report includes your name, date of birth, current and previous addresses, current and previous telephone numbers, your social insurance number, driver's license number, passport number, current and previous employers, current and previous job titles. Financial information in your credit report includes non-sufficient funds, payments, or bad checks, checking and savings accounts closed for cause due to money owing or fraud committed, credit you use including credit cards, retail or store cards, lines of credit and loans, bankruptcy or a court decision against you that relates to credit, debt sent to collection agencies, inquiries from lenders and others who have requested your credit report in the past 3 years, registered items such as a car lien that allows the lender to seize it if you do not pay, remarks including consumer statements, fraud alerts, and identity verification alerts. Your credit report contains factual information about credit card use, such as when you open the account, how much you owe, if you make your payments on time, if you miss payments, if your debt has been transferred to a collection agency, or if you go over your credit limit. Other accounts included in your credit report. Your mobile phone and internet provider may provide accounts to your credit bureau. They can appear in your credit report even though they aren't credit accounts. Your mortgage information and your mortgage payment history may also appear in your credit report. The credit bureau decides if they use this information when they determine your credit score. A home equity line of credit, or HELOC, that is added to your mortgage may be treated as part of your mortgage in your credit report. If your HELOC is a separate account from your mortgage, it is reported separately. Why your credit history matters. First and foremost, it can affect your finances. Financial institutions look at your credit report and credit score when they decide to lend you money. They also use it to determine how much interest they will charge you to borrow money. If you have no credit history or a poor credit history, it could be harder for you to get a credit card, loan, or a mortgage. It could even affect your ability to rent a house or apartment or get hired for a job. If you have good credit history, you may be able to get lower interest rate on loans. This can save you a lot of money over time. And secondly, it can show signs of identity theft. You can use your credit report to check for signs for identity theft. This is something you should be doing at least once a year for both credit bureaus. Look to make sure someone has not tried to open credit cards or other loans in your name. For more information, visit mortgagesquad.ca or give us a call at 905-553-8550.